Welcome back to the Make It Count podcast.
I'm Marcus Mire, founder of Mire Group CPAs and the Total Control accounting system.
And I'm Tyler Warner, a small business owner with a lot of accounting questions.
And Tyler, today we're talking about getting out of the shoebox.
The shoebox phase, right, of the 3 phases of the Total Control accounting system.
That's right.
So the first one is the shoebox phase.
Right.
What are the others?
So you got Shoebox, Bookkeeper, and CEO.
Gotcha. And those titles, where do they come from?
Yeah, they kind of come from the stages of business. And so a lot of people start off, and the shoebox is kind of just synonymous with being disorganized, right? In my business, a lot of times, and I know a lot of people could probably relate to this, where they're doing business, they're out there trying to make things happen, but their accounting is just a mess, or their finances are a mess. And so they show up at the end of the year with their accountant and really hand them a box of receipts. You know, that's kind of where we're getting the shoebox term, is that concept of dumping a set of receipts or a set of documents, or however you organize or disorganize your data, just to do year-end tax returns. So I think we're starting talking about this total control accounting system. We've been talking about it a lot, but we're going to start from the ground up in that phase because I think it resonates with a lot of people in terms of where they are financially.
Yeah, so the Total Control accounting system is like a roadmap, right?
Yeah.
And so what are the first 3 steps within that phase?
Yeah, so they're all C's. So we've got a little alliteration going on here. We've got cleanup.
That's helpful.
Yeah, maybe help people remember. Cleanup, consistency, and collaboration.
All right.
Yeah, so let's go into them a little bit. Cleanup is just what it sounds like. It's getting everything organized, structured, and entered properly into an accounting software. And so for a lot of people, if you're doing things in a shoebox or a file cabinet or random PDFs on your desktop and random spreadsheets, it means you don't have a centralized hub for your data, and specifically your accounting data, such that you're using it to make decisions, to plan for taxes, and to just know the health of your business. So that's the first step, is getting and when we say cleanup, that's going to be done by an accounting firm or an accountant to get you cleaned up, get it organized in such a way that you have a jump off point. Like maybe that's at year end, get somebody to help you get it organized, reconciled. Okay, now you have a good balance sheet and P&L. We kind of talked about that last episode about the different financial statements.
Gotcha. So cleanup seems like to go beyond just, when I hear organized, I feel like, okay, well, I know where everything's at.
Right.
But it's a little bit more than just knowing where everything lives, right?
Yeah, it's getting it in one place and reconciled, I guess would be a better word, meaning bank accounts are reconciled. The credit card balance is right. The loan payments, we're splitting the loan payments between principal and interest. We're not saying, like in last episode we talked about, the debt payments aren't on the P&L. They're not supposed to be. I know you said that's that should be changed, but right. That's accounting.
We'll get there.
We'll get there, yeah. Your shareholder draws aren't on the P&L. They're on the balance sheet. It's just doing the accounting. And most people don't do it well. They're not accountants. But not only do they not do it well, they have data in a myriad of places. Mm-hmm. Get it in one place, get it organized, get it cleaned up. Okay, now we can start to use that as a springboard to go forward.
Gotcha. Let's maybe be a little bit more specific for somebody who's trying to where do I even start?
Right.
What is the first? In my mind, it's transactions, right?
Yeah.
That would be the biggest bulk of this beast, right? So explain a little bit of that. You're cleaning somebody up. What's the first
step? Always is going to be reconciling your cash. So because ultimately, if you get your bank account reconciled, what comes from that are questions. Oh, I see this loan payment. Do you have a loan out there? Oh, I see you pay a credit card. You must have a credit card. So getting the checking accounts, bank accounts reconciled leads to uncovering other things that then help you do the accounting. So the first place we're going to go as accountants is get your bank statements. Let's get your bank account reconciled. From there, we're going to understand the nature of your transactions and what other accounts you might have.
Okay. So, and all of that can be done, as we've talked about before, in Xero, where you can literally just sync it with your bank account, and then you just start reconciling everything. And you can do that in a batch way too, right?
Yeah, and one of the things I always tell clients about, like, kind of this hybrid method in terms of maybe you're not really organized, but at least you have your data in one place. That's at least a good place to be. Is if nothing else, if you were connected to Xero and it was pulling the transactions in all year, and I say pulling them in, meaning Xero is populating the accounting software with your bank data because it's connected, at least that's better than all the transactions in other places.
Right.
At least even if the data was coming in and you coded it wrong, at least it's in one place.
Yeah.
So I'm kind of making that point twofold, which is having it all in one place, if nothing else, is way better than not having it in one place.
Yeah, I can vouch for that. I mean, I've done literally like gone to the bank and said, hey, I need to print out 12 bank statements.
And they charged you.
Yeah.
Did they charge you like a bookkeeping fee?
Yeah.
A per page fee?
Yeah, I want to say it was like $50 or $60. They were like to print all that information out. And I was like, all right, fine. But it was just easier. It was all online, but it was just easier to print them out and then start, going through it.
Yeah, now like you might be in that example I mentioned. You might not, every week have it all reconciled, but at least it's all there.
Yeah,
it's
I
there
try not
for
to
you.
let it go too long.
Yeah.
But yeah, that I do kind of lean on that comfort of just knowing, all right, it's there.
Yeah.
It's just a matter of me going in and syncing it.
How helpful? How helpful has that been for you?
Right. Yeah, very helpful.
Yeah.
Yeah.
Yeah. I save you a trip to the bank.
Yeah, exactly. $50 to the bank, and not having to, beg them not to. Yeah, that's the thing. When you go to the bank now, they like point you to the ATM, and so anytime you don't have an ATM problem, you have to like really wait for somebody,
right?
Like so. Anyway, all right. So cleaning up. Is there anything else other than just reconciling transactions that needs to be cleaned up? I mean, kind of go back to our example we talked about last time, where there's like maybe somebody's got a little bit of payroll, some assets, some.
Yeah, I mean, I think that all. I mean, generally speaking, and that's why I led with the bank account. That's all going to flow through the bank account, and you're going to start to understand. Okay, they've got payroll. Like for us, we use Gusto. And so maybe that's a bad example. We see, let's just say, so maybe this client probably doesn't use Gusto, but they're probably, we see tax payments going out. So then it leads to the question, okay, and again, I'm making the point because it's all going to flow from the banking data. Okay, I see that you're making tax deposits. Obviously, you have payroll. Let's go get your payroll tax returns. Let's reconcile those against what your P&L says your payroll is, that kind of stuff. So most things are going to flow from looking at your banking data, not everything, but most things, and then from there gathering, getting with the bank saying, okay, what's the principal balance on this loan, that kind of stuff. So I don't think a lot of this stuff isn't real sexy, but it's it's the nuts and bolts of getting you to a place where you can go forward. And so kind of what we do here when we talk about accounting, we understand like this is not. Like when I'm looking at you, telling you about this, I don't think you're thrilled about this or like, oh God, this is so exciting.
Right.
But and I would say for us, we're doing it because we want to get to the good stuff. So that's why we use accounting as a springboard. You can't have or run a good business without good data. So that doesn't mean we want to be in the business of cleaning people up all day, but we know it's a means to an end to get you to the fun stuff.
Right.
Yeah.
Yeah, it's the first step.
Yeah, it's a foundation.
Let me ask you another question too. I think this is something that I've thought about in the cleanup phase. Is there things that you need to do like paperwork? I know I've had to fill stuff out for like Louisiana Workforce Department. I'm not even getting the agency's names right. It just feels like I get a flood of mail and I'm just like, is that part of it too, or is that just probably things that are done when you first set up a business?
Yeah, so you're asking me.
In terms of this like cleanup phase, I know the reconciling and getting the accounting information is right too, but just in sort of a general like tax compliance.
Yeah, I think what's going to come from that is, I think it's kind of a living, breathing thing, this kind of cleanup phase. But what's going to come from that is if you're telling us you have payroll and then you're handing us payroll tax notices, well, from the reconciliation, we'll know if you're behind on your payroll tax payments or not. Maybe you got a notice from the state saying you didn't pay in your withholding. Well, how do you know you didn't?
Sure.
Accounting will tell you, okay, I withheld this much and I paid in this much, leaving this much of a balance.
Yeah.
So, yes, so during that period, everything's kind of on the table.
Gotcha.
Yeah.
All right. So moving on from cleanup, the next thing, consistency.
Consistency, yeah. And I think 2 and 3, consistency and collaboration almost kind of start to happen simultaneously. But consistency just being, okay, now you've got it organized, it's cleaned up, it's at a point where you've got it. You can say, I know that income statement and balance sheet as of, let's say April 30th. We're on May 6th. April 30th, it's good to go. So now going forward, I'm going to tackle this. Either I've got somebody outsourced handling it, so they're doing it consistently, or in-house we're doing it consistently. And that whatever that looks like for you, is that weekly handling of the transactions, is that monthly? I would think more weekly. That's probably a better cadence for most people, because things, as you get too far out in advance, you don't remember as well. But all that looks like is just finding your rhythm and consistently keeping up with this stuff. And you mentioned it earlier, the software now starts to do a lot of this work for you. Like you talked about Xero and setting up bank rules. I mean, what bank rules are essentially in Xero is, as the data pulls in, you tell it predefined criteria that code the transaction or reconcile the transaction for you. So, I mean, once you start to get some data in there, you leverage that. And a lot of times we would do that during the cleanup phase. We would set up bank rules because, again, we're in your bank statements looking at the recurring transaction or your credit card transactions, knowing, okay, they spend at these places often. We're setting those things up for you. So in the cleanup phase, we're starting to set you up for success in the consistency phase. And really, consistency is just keep doing it. Keep working on it, and that's where you start to refine, is in the consistency phase.
Yeah, and to that end, I mean, you can literally do this from your phone. I know. I mean, that was a big boost in my consistency whenever I realized, okay, I can just pull up the app on my phone, reconcile a few things, and then the coding of it too is a huge advantage because, for my business, I mean, I literally spend the same thing. Most of it is fixed, like Popeyes,
Burger King.
Yeah, I mean, name the fried chicken place. Yeah, Steven's Fine Food, shout out if you don't know about that.
Oh, dude.
Man.
Anyway. Honey mustard? Oh, yeah. Anyway, okay, we're getting off track.
Right. But, so yeah, those 4 fried chicken places, it automatically knows, okay, that's meals and entertainment.
In your cleanup phase, we handled the fried chicken places. We knew.
Right.
Yeah.
So.
Yeah, but I mean, it's just the consistency phase is when you start to get the efficiencies. Let me back up. You start to leverage the efficiencies. You start to get usage of those rules. Xero has AI that starts to also, if you don't have a bank rule, it starts to suggest certain things to you. It's really where it starts to take hold. And the beauty of Xero is that bank feed, the data flowing in for you. I know that in other accounting software they have bank feeds, but people don't use them maybe, or they don't work as well. But like in a desktop software, I think a barrier to consistency is having to get your online banking up on one screen and type in the other. Mm-hmm. It sounds silly, but it's one more thing to do. Oh, let me go get that open. No, when you got Xero, like you said, you're at the grocery store waiting in line. You could code 5-6 transactions right then and there because it's queued up for you.
Yeah. Another thing too that we hadn't talked about was like the ability that you can have someone else in your staff do this, and it's easier for them too. So, I mean, that's a huge thing. If you're a larger business, you might not be the guy who's reconciling those transactions, but you've lightened the load for whoever is responsible for that in your business.
It's like anything. I mean, in your business, if you can use a piece of software that takes the workload down by 20, 30, 40, 50%, I mean, you're going to do that. And so if you got somebody you've delegated this to in your business, you're going to make their life a lot easier if you're leveraging a good cleanup and a good setup.
Right. Okay. So that's being consistent. The last piece of this thing.
Collaboration. Yeah, so collaboration is exactly what it sounds like. It's working with somebody like us and my team just to look over your shoulder because, like I said earlier, most people aren't accountants. They don't want to be, but some can grow into, pretty decent bookkeepers. Like some people, they or not if they don't want to do that. Some people want to manage their own finances in-house, and they just need a little oversight. And so that's the beauty of the collaboration and the beauty of the cloud is that I got lots of clients that happens to them all the time. Hey, I'm trying to do X, Y, or Z in Xero. And literally, I'm on my computer. Because it's so easy to navigate to in a web browser, I pull up their account, I look at that transaction. A lot of times I'll explain it to them over the phone, in a quick call, or better, I'll send them a Loom video. We've talked about that, where I just record. It's a screen capture video, my voiceover, their Xero on my screen. I just walk through what I do, send them the video. They can use that link anytime.
Right.
So it just leads to a better engagement, and that's why we put it in the first phase of the total control accounting system is that you need to leave that kind of bookkeeper phase with somebody walking alongside you, and cloud accounting makes that super easy.
Gotcha. The shoebox phase.
Yeah.
So really bookkeeper.
What did I say? Yeah. When you're going into the bookkeeper phase.
Gotcha. Yeah.
Yeah.
So the collaboration, what kinds of things are people collaborating on in that phase?
Yeah, I mean, just so we're looking, obviously the accounting piece, we got that, but it's tax planning. We are right now, because we have access to clients' data, we can make quick decisions on these employer retention credits. Like big right now, obviously PPP was huge. PPP round 2 was dependent on a 25% drop in revenue. We got your data. How quickly can we go in there and look at it, as opposed to you having to get it cleaned up, send it to us in a file. So like basically making moves becomes a lot quicker when you've got somebody and somebody that you've got an engagement with, that their job is to look over your shoulder. I mean, I've got clients now, I'm running the numbers on employer retention credits. Okay, did they have a drop in revenue? Okay, when? How much is their payroll? How does that interplay with the PPP? All that's done because I've got access to their data. Or I had another client recently, we're sitting in a meeting, I noticed he didn't pay his fourth quarter estimate. And the reason I noticed that is because we're doing quarterly kind of reviews. I looked in there, saw I didn't pay it, called him, avoid some penalties. It's just kind of an oversight. He forgot to do it. That was caught because I'm in the data. I would have never known that.
And so I think that's a good illustration of how it builds, right? So if he hadn't been having it in there cleaned up and ready to go, you wouldn't have known.
I wouldn't know to look for it.
You wouldn't have been confident in it
to
know that this is something wrong. And then if he hadn't been consistent, you could have been thinking, okay, well, maybe it's just not up to date, or
That's a good
I'm
point.
not sure. So the consistency there is what triggered that alert, essentially, when you saw that there was an inconsistency.
Right. Well, at least to reliability. Which I guess to your point, like, because his data is consistent, it's fairly, and I would say pretty reliable. Like, they kind of know over time where to put the transactions. We've worked together long enough. And so we've talked about this before, trend analysis. What comes from consistency and collaboration is I know when things look out of whack. And most of the time the clients do too. But clients a lot of times don't look at their financial statements. We talked about that last episode as much, but we're looking at that stuff. So we can spot things. And if we know the baseline is, man, they're really normally consistent, this is not an anomaly because they just didn't enter something. It's really an anomaly. We can drill down on it.
Yeah. So the cloud component is really a huge piece of this collaboration, because it's like you described. I mean, I've actually been on the other end of that phone call where I've called the office and somebody's able to literally pull up my account and see the actual transaction, code it right there, and I can see, oh, okay, perfect. Yeah, everything was good to go. Mm-hmm. So I'll say, I mean, that's probably a huge advantage of cloud accounting, where maybe you can get cleaned up in any kind of desktop software, and you can even be consistent. But that's sort of where it gets separate.
Yeah, I know it changed when we adopted cloud heavily about 4 years ago. That's when our business changed, and that's when our client engagements changed. Honestly, that's when we were able to go more flat rate billing, because we could consistently understand the workload because we had our hands around it, and so it led to a better experience for everybody. But the collaboration it's just, if you don't have that, I'll reiterate this, if you don't have that, you're missing out, because there is a gap in the communication. Your account is busy, you're busy, they don't know to look for things, and in fact you haven't given them the means to do it if you're not collaborating.
Right. All right, well, I think that's pretty well explained, and you've highlighted some pretty good benefits of going through that first phase, leaving the shoebox behind, and becoming a bookkeeper.
Well, one thing we hadn't mentioned too, going to that next phase, and I'm sure we'll talk about that in a second episode. But one thing we hadn't mentioned is just the once you get this system going, where it's accurate, so I'm going to use different terms. For cleanup, I'm going to say accurate. For consistency, I'm going to say, well, let's use consistency. In collaboration, I'm going to say you got somebody looking over your shoulder. Okay. Once you've got it ongoing, accurate, and somebody helping, you got a pretty good system. I mean, you kind of can rely on it, and then you can step out and know that, okay, I'm on vacation, I've got my data with me, I've got an iPad, I got a laptop. If I need to do something, I can. Things are running smoothly, but if I need to jump in and do something, I can do that.
Yeah.
It just starts to open up more avenues to do better business.
Sure. And just for those people who are listening and thinking, why would I want to do accounting on the beach?
You don't do that?
No. I think a better point maybe is that you don't have to do accounting on the beach,
right?
Because it's taken care of, beforehand.
See, this is why I have you. You helped me. You saved me from myself. Apparently.
Yeah. Well, I'm just thinking, no, that's not
terrible.
That's not the end goal here.
Yeah, that's not what I meant.
Right. No, I knew what you meant. Yeah, and to that end too, when things are cleaned up, consistent, and you can have access to a professional to collaborate with, then you don't have to be worried about it on the beach.
Right. There you go.
So, all right, well, to wrap things up, be on the lookout for phase 2 in the next episode. I'm assuming we'll be talking about the next rung of this total accounting total control accounting system.
Right.
But if you can't wait,
right,
then go to mire.group. And like we said last time, it's MIRE group, or so mire.group.
Yep.
And you can actually take a self-assessment quiz that'll sort of identify where you are currently, and where you can get started on the total control accounting system.
That's right.
And there's a bunch of resources there for you as well. So head there in the meantime. And until then, we'll be back next week.
See you next time.
Thanks.